morning, everyone. You're riding shotgun again. Richard with Caliber here. Just wanted to chat briefly on my commute here about, let's talk about FHA loans. And what's the benefit? What's the pros and cons to them? First of all, I would say we really look at several factors when we decide or when we recommend an FHA loan. In most cases, I would say it has to do with credit score and or funds for closing, like assets. How much a borrower can put down. I would lean even more toward the credit score thing, just because FHA is a little more forgiving than other loans, like a conventional loan. So the pros with FHA loans are you can get into a property with as little as 3.5% down payment funds. And there are down payment assistance programs that we can combine with that actually helps you get in with zero down. But of course, there is always closing costs when you buy a property, so we have to factor that in too. Do we have funds for closing costs? Are we going to need to request that the seller help contribute to that? Or not, or provide other down payment assistance sources to provide those closing funds. So when you're purchasing with an FHA loan, there's what's called mortgage insurance, which is a 0.55 factor. So loan amount times 0.55 divided by 12, that's your rough MI factor on what your payment will be on that. If you put more than 3.5%, if you go to 5% down, that factor goes down to 0.50, so a little bit of a break there. So it helps with the monthly payment a little bit. If your credit score is in the area of the lower 600s, your rate's going to be higher than if your credit score is in the high 600s. So that does factor into what rate you get on an FHA loan, just like a conventional loan. But once again, the rates tend to be a little bit better on FHA than conventional. So it could be a very viable loan product for a lot of people. Now, some caveats with FHA loans, just a couple of them. You can only have one FHA loan at a time, with just a couple exceptions. If you've co-signed for someone, a family member, and they have an FHA loan, then you can get your own FHA loan. That's fine. If you're relocating for work and you're forced to relocate within a certain mileage distance for work, then you can potentially have a second FHA loan if you're not selling your current property. Stuff like that. If you're vacating a primary home, one caveat on FHA, if you're vacating a primary home, turning it into a rental, and there's an FHA loan on that property you're vacating, and you're within a certain mileage distance of the home you're buying, you can't use rental income from the home you're vacating to qualify. You can rent it out, you just can't use the rental income from it to qualify for the next home at the time of purchase. So just a few caveats with that. As far as condition of the property, we can do an as-is purchase with FHA loans. That's not a problem, just like conventional loans. However, the appraiser will call out just a couple things on FHA loans that they may not call out on conventional loans, such as, for example, would be any chipped and peeling paint. They're going to call to get that fixed. Doesn't mean you have to repaint the whole house. It's just you got to scrape off the area that's chipped and peeling and at least put some primer paint on there, exterior paint, to cover it. That will get called out for sure. Any other health and safety items would get called. Exposed wiring. If you have a missing light fixture and there's wires hanging down, they want that capped, covered, just for safety reasons. But other than that, it's very similar to other types of loans on an as-is purchase. They're not as difficult as they used to be 10, 15 years ago. They've, lightened up on some of that stuff. We do need a few extra forms with FHA, one of which you need that lead-based paint form. If the home's built older than, I think it's just top of my head, I think it was 76 or 78. I get those two dates mixed up because manufactured homes, you have to have 76 or newer to finance those. Uh, but other than that, the loan product, once again, I've had borrowers that have had okay credit, like good credit, but not a lot of it, and the underwriting system's reading it, and it's just not liking the history, and we just can't get it through conventional. You flip it to FHA, and it approves. So once again, it's sometimes we're pushed into certain buckets based on the overall financial profile of the borrower. But it's still it's a good loan. I've bought properties with FHA loans myself personally, and just for lower cash to close, stuff like that, throughout my life, and refinance later into a conventional loan when rates made sense to do so. There's one thing with FHA that I wanted to mention too on refinance side of things. If you're going from FHA to FHA, we can actually do what's called a streamline refinance, where we don't have to pull credit, we don't have to verify income. It just has to have an improvement to you. It has to make sense, meaning you can go, let's say you got an FHA loan at 6.5% interest rate, and rates drop to 5.5. We can streamline that and make the process simpler than if you were doing a full-blown refinance, maybe FHA to conventional. We're gonna have to re-verify everything. Can't do cash out when you do those streamlines. It's just rate and term refinance. So there's some benefits, pros and cons. Any questions ever, just reach out. Happy to answer them. Have a great day.